Morning, Steve Walker, Client Portfolio Manager on npower's Optimisation Desk with the market update video on Thursday the 16th of April. So markets have again opened relatively flat this morning, common theme really across this week. Key things to look out for today, however, include a nudge higher in gas demand, oil markets gaining overnight, helping give some direction to the curve, although the fundamentals, certainly on the near side, are relatively unchanged again. For more information, please contact the Optimisation Desk at the displayed email address, or keep watching. So kicking off with the gas market, as I mentioned, fundamentals are relatively flat, down day. Had a nudge higher in demand to above 200 MCM, I think for the first time this week. Resultant short early line packs continuing to send over 30 MCM through IUK, so helping support that demand number. The key change overnight has been the increase in CCGT demand, really to above 30 MCM, with scope to move higher through the day as current wind feed-in outturns below forecast levels. Storage withdrawals and LNG send-out are largely unchanged. Down day, they have dipped slightly. Looking at that power market number in more detail, wind load factors, as we know, heading into a period of relatively benign conditions, so below 20% across the coming 7 days. As I mentioned, currently outturning below forecast levels. This has been offset by reasonably good solar levels, around 4 gigawatts at peak into the weekend, helping offset some of those lower wind generation numbers. Interconnector imports remain at full capacity. Spark spreads, however, remain quiet amid the unchanged, mostly fundamentals. One of the other kind of key drivers we're seeing at the moment is that volatility in oil, helping give direction to the curve. When you do have relatively quiet prompt fundamentals, that can be the case. Also had a significant amount of headline attention in the recent months. So we saw yesterday's session a 5% rise in the prompt oil contracts, which is the highest level year to date, around $63. A slowdown in inventory builds, although record numbers, and potential cuts from major producers have helped spark that buying interest yesterday. That's in contrast to a likely continued surge in OPEC production. You might remember March's headlines, OPEC reaching significantly higher levels than we saw towards the back end of 2014. That's likely to have been continued into April. It's also in contrast to the terrible Chinese data that we reported on yesterday. So we might see a pullback from recent increases. A safer bet is probably continued high volatility. That's it for today. Have a good day.